So as more oil hits the market from countries other than Russia, the price of oil has actually dropped more than $30 a barrel since its highs in early March. That's when sanctions banned the import of Russian oil.
But gas prices have not dropped nearly as quickly as the prices rose, and that has drivers and even President Joe Biden asking why. Wednesday, President Biden tweeted, quote, "Oil prices are decreasing. Gas prices should too. Last time oil was $96 a barrel. Gas was $3.62 a gallon. Now it's $4.31. Oil and gas companies shouldn't pad their profits at the expense of hard-working Americans." Joining us to explain what is going on here, Chief Oil Analyst at Oil Price Information Service, Denton Cinquegrana. Thank you so much for being here this morning. Denton, just want to ask you right off the bat, what do you make of what the president is saying there? Is he accurate? Is it equal to make that link there?
It's really hard to make that link. And actually, since that tweet, prices have gone up about another $9, $10. So we're in the midst of a really volatile market. So prices are back over $100 a barrel. Well, gas prices have come down a little bit, at least. There's more room to the downside, and it's just going to take time. So I would be preaching patience right about now.
Right now, I drive around all the time, and one station near my house was $4.49 the other day. Just the other day, it was $4.09. So we have seen sort of a significant drop over the last week or so. Is that going to continue, or is this just sort of a blip on the overall radar?
No, I think it will continue, at least in the short term, over the next week or two, probably through the end of March. And, Dan, like you said, I saw my first sub $4 station this morning driving my son to school. So it's coming. It's just taking some time. So, again, a lot of it has to do with timing. So say, you guys own a station across the street from me, and I timed my wholesale purchase poorly, right? And you timed your wholesale purchase much better than me, 25 cents cheaper, say, let's make for an example. Until I drop my price, you guys could hold your price up there. But then once you guys start to move, then I'm going to have to move. And that's why you see some of the real high volume stations in the area, they're going to be low price leaders. They're going to start to move prices down because honestly, a lot of those folks, they don't make much money on gasoline. It's the quote unquote Cokes and smokes when you go into the convenience store to buy that type of stuff that has the higher margin to it.
Interesting. So are you saying that the price gouging actually doesn't exist, or does it play a very significant role in the price we pay at the pump?
I don't think there's gouging necessarily, and there's laws against that. If it can be proven, the penalties are pretty punitive. But I think it's more of a timing issue more than anything.
What about, let's talk about the big picture here, because we do know that everything going on with China right now, as they're shutting down with COVID protocols, they're not necessarily asking for an increase in gas. And so then that kind of frees it up for everyone else. Once they get out of their lockdown, what happens then?
Yeah, no, that's a great point. And last time I was on with you guys a couple of weeks ago, I said, we got to remember at the end of the day, it's a global market, right? So when you shut down a city of 17 million people, that's going to have an impact on demand, albeit a short-term impact on demand. But when that city comes back, they open up again, it's going to get demand back up to where it was from a global perspective.
This has become obviously a political issue and just an issue that affects everyone. Everyone wants the gas prices to be lower, but there are some that say that the U.S. should do more to produce its own oil, to produce its own barrels. Is that as simple as sort of waving a magic wand and making that happen? And is that a possibility that maybe there is some red tape that needs to be rolled back?
Yeah, I mean, it is a huge political football, as you said. And again, you're 100% correct, where you just don't snap your fingers, wave a magic wand, and more oil appears on the market. It takes several months for the fields out in West Texas, in North Dakota, and other places. It takes probably from start to finish about 6, 7, 8 months to get that oil to market. Now, one of the things they're grappling with, like every other industry out here, there's labor shortages. There's shortages of equipment. One of the key components to fracking is frac sand. There's a shortage of frac sand right now. So you're looking at issues with just about everything.
And Denton, could the Biden administration do more to speed that up?
Probably not. I mean, unless they could produce people who could work in the oil fields and make them, kind of create them out of nothing, then I'm not sure what else they could do. I mean, sure, they could incentivize the producers out there. But at the same time, the producers in West Texas and places like that, they've had investors and shareholders, et cetera, that say, hey, we want some return on this investment here. So the phrase that's been very popular over the last, say, 8 months has been capital discipline. So they're returning dividends to shareholders, returning capital to those that invested in them in the past, because in the past, when the price goes up, their production would shoot higher and it would crash the market. So like I said before, oil right now is at $100 a barrel. But if you go out to December of this year in the futures market, it's below $90. So, one of the other things that would be a circuit breaker right now, if those producers were going to come back hard, they would be selling into the futures market to lock in some of these higher prices. And they're just not doing that right now, it doesn't appear.
And speaking about higher prices, one thing that we do know is going up is diesel fuel, and that affects everything from whatever we buy to our groceries, because everything gets shipped here on trucks. Yeah, no, and again, when we were talking 2 weeks ago, that was my biggest concern, and it still is. Diesel prices remain very high. In the futures market, ULSD, ultra low sulfur diesel, is about $3.50 a gallon. So again, those and retail prices are over $5. So when we talk about gasoline being $4.30, either side of $4.30 when you talk about the tri-state area, diesel is way high. So it's not going to help with when you go to the grocery store, when you go to one of those big box retailers to buy, I don't know, Easter candy. So, prices are going to remain high, and that's the whole inflation game.
All right, Denton, thank you very much. Chief Oil Analyst at Oil Price Information Services, Denton Cinquegrana. Thank you very much.
Have a good day, guys.